industry leaders here in the Canadian market, US market as well. So thanks everyone for joining us. I'm Cihan Tuncay. I run Galata Advisors. Just briefly about me, sell-side advisory background, investor background, corporate executive, leading IPOs, sale of companies, all that kind of stuff. And we work on capital markets advisory for companies looking to raise money, investor relations advisory, and anything that you need to help meet your strategic growth objectives. And over the years, I've had the chance to work with each one of the esteemed companies on the panel here today. So good to see friends and colleagues from the past. And I'll just introduce you to the group, kind of going through to my left here. So we've got Lawrence Krimker, CEO of ECN Capital. Recently, the company was public. He took it private. So congratulations on that. We got Sheldon Saidakovsky, CFO and co-founder of Propel, one of the great fintech lending, consumer fintech lending stories over the last couple of years. And just over on the very end of the panel here, the original fintech bank before any of that was ever deemed a term, revolutionized the industry with electronic deposit distribution systems. Decades ago, Dave Taylor, founder and president of VersaBank. So thanks everyone for joining us on the panel today. And we're going to go through a couple different topics. First, in terms of strategic transactions, we've got a very good mix of experience and background here from M&A, buy-side and sell-side perspective, as well as funding, how to achieve your funding objectives for growth and things like that. So a lot of different great perspectives as well. And of course, we'll get into this topic, but attracting capital, attracting investor interest, domestic versus international or US opportunities, a very good mix of experience on that on the panel today. So first, let's start with on the M&A side, and I'll kind of go in the order that we're sitting here. So just from the seller perspective, so Lawrence, you've obviously sold, obviously bought recently ECN Capital, but have a great experience selling businesses as well. So can you talk to the audience? I'm sure there's a lot of people here thinking about what their exit could look like, how do they realize their liquidity goals, going forward. What are the kind of 3 key points that you would advise someone that's looking to sell their business and to execute it effectively and get a transaction over the line?
Got it. First off, excited to be here. Great to see everybody. So from my experience, initially when we were looking to sell a business, we would start with trying to maximize purchase price. And I think that's probably common practice. And going through that experience, I realized that maximizing purchase price, I think it starts with figuring out, first off, what's your company actually worth, right? And that may sound a bit counterintuitive, like you should already know what it's worth, but every business is different. The metrics that matter are different. So, when I think about what the company's worth, it's really, what metrics matter, what is the kind of standard multiple against that metric in that industry, and then you'll be able to, within that tight band, kind of know what your company's worth. But purchase price is more than just what your company's worth. From my perspective, it's what's your company worth, and then what's the additional premium on top of that. And that really is like the holy grail. When you try to maximize purchase price, it's figure out what it's worth, but then what's the additional premium you can get. One thing that's worked really well for me in the past is looking at my business from the lens of the purchaser and really trying to understand what are what I call light switch synergies that they can do on day number 1. And understanding that's incredibly valuable because there are synergies that will happen over time, right? Upgrading the technology platform, reducing OpEx, all that stuff. But I don't feel like the seller should be paid for that because the buyer is going to do that work. What I'm talking about are light switch things. So I'll give you an example. 2019, we were selling a business, a couple $100 million in assets, and we realized really early on that the purchaser had a significantly lower cost of capital. And if they refied our portfolio with their cost of capital, that would free up tens of millions of dollars that they could use for my premium. So what we did is we used that as negotiating leverage to juice out as much premium as we could. And we did it in a really cute way. We negotiated to the the maximum amount of the range of multiple that we could, and then we illustrated for them, hey, we recognize that you guys have a lower cost of capital. We put this beautiful little bridge together. We're like, hey, if you refinanced our portfolio with your cost of capital, you'll free up all this additional cash. And then when it came time to the final negotiation, we were able to extract a much larger premium. So my short answer is really look at your business from the lens of the purchaser to try to identify the light switch synergies that will create immediate value in their hands, and then use that for your purchase price premium. But it all starts with understanding your true value and then trying to get premium on top.
I think it's an incredibly important point. Like you said, it kind of goes without saying the numbers have to work, but in my experience, being able to sell the prospect to the buyer of how they're going to make money off of this deal, they're really excited about it, because the buyer has to go out and raise financing to buy your company, right? So they have to go sell the concept to their investors, why it's undervalued, how everyone is going to make money off of doing this deal, and presenting it in that way is the most effective way, as opposed to saying, well, I just want X dollars, I want this premium, without really justifying how the buyer is going to make a tremendous return off of buying your company.
That's exactly right. It's the negotiating leverage is created in understanding what those light switch synergies are and how much more valuable your business is in their hands on day number one.
Perfect. And then just from the buyer perspective, then let's move down the panel here. So Sheldon, you guys obviously made a sizable acquisition in Quidmark, I think it's a year and a half ago or so now. Not just from a financial perspective, but also international expansion as well. So maybe comparing that to what Lawrence mentioned, how do you look at it from the buy side perspective, and also not just what it took to get that deal over the line. You see lots of opportunities on a daily basis. I've shown you stuff, all bankers show you stuff all the time. What were things that were the deals that didn't go through? What differentiates the one that you picked and what you'll be looking at going forward?
Yeah, thanks a lot, Cihan, and great to be with you guys. So yeah, as you say, I mean, we've probably, since we've been public, we've looked at about 40 or 50 transactions. And, Quidmarket, which is a UK company, was our first acquisition since we've, since we've been a company since 2011. The way we evaluate, and it's been an incredible success, by the way, we couldn't be happier. The way we evaluate companies are basically on 3 criteria. And a business needs to check every single box. Financial accretion, the market needs to be something that we like and we can envision a lot of potential in. And thirdly, which is the most complex thing, is from a culture perspective. We need to make sure that it's well run and it can integrate with us very well. So from a financial accretion perspective, that's actually the easiest one to analyze as finance people. We need to make sure the company is profitable, there's good growth prospects, and it's growing at a nice clip. And also we can envision the synergies and additional value that we can unlock when we work together. From a market perspective, first of all, there's got to be a big TAM in the market. And we need to analyze and assess the competitive dynamics in that market and like the way that looks. And also from a regulatory perspective, regulation needs to enable companies to be able to service the large demand that's there in the market. And then finally, as I mentioned, from a cultural perspective, that's the hardest one. I mean, we are a founder-led company. We started the company back in 2011. All the founders are still together. The tenure of our executive team is in excess of 8 years, and we built something really special, and we are not going to let anything disrupt that. So a lot of companies actually failed from that perspective. Quidmarket, which is our now Propel UK, they looked very much like we did about 5 or 6 years ago. So we could map out exactly the growth and opportunity in that particular market and with that team if we apply our expertise and balance sheet. Great
to hear. And then just, David, from your perspective, I guess how long has it been now? 2 years or so almost since you guys went into the US and bought, I think it was the Minnesota-based bank, if I'm not mistaken. But what was your perspective on that sort of expansion? You know, you bought a dormant banking license to springboard your way into a growth platform down there, but would love to hear your experiences on buying that and expansion there too.
Yes, indeed, and good morning to everybody. So looking back a little bit in history, I did the same thing around 1993 when I came up with this crazy idea at the time to be the first branchless digital bank. And I did what a young MBA student probably did. I did up a nice business plan. I thought it was great. Brought it to the regulators. They thought I had two heads and kicked me out the door. Branchless digital bank, David. Branches have pillars. Banks have pillars. What are you doing? So I looked for the smallest financial institution in existence at the time, and that was Pacific and Western Trust, located in Saskatoon, Saskatchewan. And I acquired it so that I had a lending institution platform that I could demonstrate to the regulators how a branchless digital bank would work. And thankfully, August 1st, 2002, I was blessed with the first Schedule I bank license in about 18 years. So that worked. And so when I was put my greedy banker eyes south of the border to see what I could do down there, I thought, well, it worked once, it's going to work again. I found that, as you say, the smallest financial institution, I think, in existence in a village in Minnesota called Holdingford that had an OCC, i.e. National Bank License. And I thought, well, gee, it won't work once before. I went to little due diligence, have a look at this acquisition. I saw a coyote in the hall, in the foyer with a rabbit in its mouth, literally. And I thought, well, it's got a license. It has the OCC license. And
Hopefully it's not in the coyote's mouth.
whether it was supposed to be about our lending program or I don't know which one was the boar or the lender, the coyote or the rabbit. But nevertheless, I think the takeaway is that if you're focused on, as I was, simply the licenses, don't want to get confused, distracted about anything else. The brokers investment bankers were showing me all kinds of banks in the United States with huge branch networks and everything else. And I thought, yeah, but I don't like branch networks. So we acquired it, and it did exactly what we want. I think a short year or so later, U.S. is producing 21% of our revenues, which is, fantastic from a banker's perspective.
Great, congrats on that, and great to see the growth coming through there. And so, let's talk about, just briefly, less exciting, but and a really important part to each of the deals that the three of you spoke about with respect to getting a deal done, plus in your daily operating environment. How do you navigate the regulatory scheme, whether it's cross-border or even domestically, to get the deal approved, but also manage regulatory? You're all in a very highly regulated business or businesses. How do you manage that with respect to transactions? So what's your experience?
I mean, this is a really short answer. I mean, we just spend a lot of money on really good counsel. For us, across multiple platforms that we own, ECN being the most recent, we're in heavily regulated markets in the US, extremely niche asset class that we're in, requires a high degree of subject matter expertise. We have our own in-house legal, we've got a whole legal team obviously, but we very much rely on subject matter experts, specific lawyers, making sure that we navigate the regulatory framework properly.
Got it. And Sheldon, was there anything with respect to the UK acquisition that you had that stands out from a regulatory standpoint, or was it just smoother or easier if you're subject to FCA or what have you out in the UK? What was your experience there?
Yeah, I mean, as Lauren says, we provide credit to non-prime consumers. It's a very highly regulated industry, but we're used to operating in that type of market in the US, where there's different regulation at both the state and federal level. I mean, 90% of our business is in the US. So we're quite used to that. We have local counsel in every state. We have in-house counsel, in-house compliance. One thing that we don't take any risk on is our compliance. So that's paramount to be able to operate and create long-term value and growth for the company. So we approached the UK the same way, and why we liked Quid was that they had that mindset as well in the UK. And what's interesting in the UK, the regulatory environment is actually quite friendly to industry. They went through some regulatory changes years ago, which led to a lot of supply exiting the market. The regulator realized that they overcorrected, as is the case many, many times, and they started inviting strong, solid, compliant operators to come back into the market. So that created a big opportunity, because in the UK, there's a vast undersupply of credit to a demand in TAM that's just growing significantly.
Got it. So good to hear you're able to navigate all that and get your respective transactions done. Changing gears to something more exciting. I don't want to get David into the regulatory discussion and stuff like that from your perspective, but more importantly, of the three companies that are up here, and especially those that are looking for financing today and how to navigate that. You have successfully cross-listed your business, so you're publicly traded in the TSX and the NASDAQ. How has the capital raising process gone for you from a public company perspective, not just on the deposit side, but on a public company perspective, getting listed in the US, and how has your experience been versus being Toronto listed and access to capital?
Well, yes, we're listed on the TSX here in Toronto and on the NASDAQ. And so I've got a unique, in this audience perhaps, perspective on the regulation, securities regulation, also bank regulation at the same time. And like you were saying, Sheldon, I found the United States to be very welcoming, receptive to our business model. In Canada, it would be, I'd hear, well, why aren't the big banks doing it? If it's really something important, I'm sure the big banks would have done it. In the United States, wow, you've got a new model? Wow, how does that work? Wow, that's fantastic. I think there's root reasons why the receptivity for a tech company in the United States is that much higher than it is in Canada. I think one of the reasons is, particularly on the banking front, is you have 4,400 community banks in the United States all voting, and their members are all voting. And in Canada, you may be 95% or even higher is dominated by six banks. Not very much voting power there. So in the United States, if you're bringing a new idea that's going to help the consumers or the small businesses, boy, they're in. Where do I sign? Whereas in Canada, they look sort of suspiciously at you. So this is a new method of financing point of sale. Why would you be doing that? It's a different atmosphere. So it's worked well for us. And if anyone wants to talk offline about the weeds of that difference, I'm happy to do that.
Yeah, so maybe just quickly, briefly touch on, you have some key announcements recently. If you were referring to, real-time funding that you've launched, is it available in Canada as well? But
yes.
So talk about, those innovations that you've developed, real-time funding and tokenized deposits, I think would be a great subject matter. As a leader in that space, you probably were the first one to execute a tokenized, bank deposit or depository receipt. So if you talk about that to the group, that would be great.
Yeah, let's start on that one, because that's a little bit the opposite, as I was saying earlier. We formed the first digital vault in about 2018 to take advantage of blockchain technology. And we pioneered a tokenized deposit in Canada shortly after that. So that was, the Canadian environment was, I guess, more conducive at that time. I remember Jeremy Rudin saying, oh, so that's like what banks used to issue in the past, only in paper format. I said, yes, indeed. So at that time in the United States, The Sam Bankman-Frieds were out there getting incarcerated and all those sort of things. So I found it quite the opposite in the States to launch a tokenized deposit. In fact, they said, don't talk about it, David. So I wasn't talking about it. But now, of course, tokenized deposit, stable coins in the United States is the new best thing. Very conducive. Canada seems to be a little bit reluctant, although you probably know that we're the first custodian of the first Canadian stablecoin being QCAD. So there's a bit of a difference between the receptivity. I said to the US counterparts, think of Canada as my garage. This is where I invented this tokenized deposit, up in the garage, and brought it to your country. But with respect to the real-time purchase of receivables, that's a breakthrough in the world of finance for a small business and consumers. Normally speaking, a point-of-sale finance company that gets of any size will move to the securitization market to batch up their receivables and tier them and then sell them off into the marketplace, which that's been the mainstay for that industry for decades and decades. So most recently we announced something I think is revolutionary, and that is that we've developed a technology with the use of AI where we can buy receivables as they're generated real time, go onto our balance sheet and leave our partners to focus on what they do best, credit adjudication and dealing with the marketplace. So yeah, we launched that on both sides of the border. It's been extremely well received. Everybody we talk to, where do we sign? You know, both Canada and the United States, both is.
You've got a client here, a partner. So maybe feel free to chime in to endorse.
I think I recognize
the product.
that guy.
I was going to say, we're a recipient of Dave and VersaBank's innovation, not just with this product, but over the last close to 15 years, I'd say.
I guess so.
You know, and it's been a while. If just for a second I could speak about the importance of having a financial institution or backer that'll help support you as an entrepreneur. For me, in my career, it has definitely been one of the foundations for our success, regardless of which business we were operating at the time. I think we've probably been through half a dozen companies over that period of time, whether it's today manufactured housing and RV finance or home improvement loans. We've done a whole bunch of things together. And what I would say is for anyone that's kind of going through that evolution of building up their business, having a financial institution that genuinely understands what you're doing and you develop that real relationship, for me, that has been like the cornerstone of how we've been able to grow. And what I would say is that relationship is developed based on a few things. Number one, it is just trust and transparency, which take time. And as an entrepreneur building a business, things are never going to go according to your business plan. It's just not reality. And one of the things that we have done, I think, really well with VersaBank is open, honest communication. Something doesn't go right. I'm looking at some of the other Versa folks there. They know what I'm talking about. Something doesn't go according to plan. We've always been transparent. We're like, hey, we're creeping up on this covenant. Here's why. Here's some data to support what's been happening. Here are the remedies that we're going to take to help cure that. And we work together as partners. And then as Versa has innovated and grown their business with these awesome new products, we've also grown and we've been able to do that together. So it's
absolutely. If you haven't read it, there's a book by Stephen Covey called The Speed of Trust. And it says just what you were just saying there, Lawrence. It's worthwhile. I mean, I built a business on trust. I started, I got a lesson from the prison. I was in a maximum security prison. I'm sorry, I don't know if you guys knew that, right? I did a little time, a year and a half. I was a prison guard.
Dave always has lots of interesting stories.
And talk about the value of trust. I came across a despondent criminal who had lit himself on fire. I quickly got him out. It's a long story. Covered him up in wet towels and saved his life and all that stuff. And a little later on, a murderer's murderer came to me and he said something to the effect of, hey man, you looked after my brother. I said, is that your brother? He said, yeah, man. Thanks for that. So, long story short, the Thunder Bay District Jail was overtaken by the inmates. They captured the guards, cut a little piece of their ears off, their throats a little bit. And here's where trust comes. He said, "Hey, Dave, you can go, but those other screws are dead."
Trust is, many examples, a very important and valuable gift or tool to have, I guess.
So when I became a banker, I carried that with me. I'm going to trust my...
A very important lesson to learn.
Absolutely critical.
Sheldon, maybe over to you. On terms of, a lot of people here, we just got a couple minutes left, a lot of people here are looking for financing. What would you say your experience has been, going through funding your growth as from a CFO perspective, how the environment is for that, whether it's access to equity, access to other forms of capital? What are some of the points you would highlight for the audience here looking for growth funding or what have you?
I mean, from our perspective, being public has absolutely helped us, execute on the quid market transaction and have access to capital, and it gives us the flexibility, the optionality, and the credibility. When we approach and evaluate any potential targets. So we're certainly looking. We were able to, through the quid market transaction, raise $115 million within 24, 48 hours through a bought deal that was 2 times oversubscribed. So that's really exciting. So we're certainly open for business, I would say. I would be remiss though if I didn't mention some of the frustration being a financial technology company that's public in Canada. We feel that we're vastly undervalued and our stock price doesn't reflect our profitability and our growth. There's a small and relatively concentrated investor base here in Canada. We've actually heard recently that some small cap funds have actually closed off, unfortunately. And also the funds in Canada are investing in resources like gold and mining and some select technologies like AI and space. So it is kind of creating a scenario where we feel like we're undervalued and we're certainly trading at the lowest that we could. I mean, our business is growing at a CAGR of 43% in revenue since 2019, and earnings are growing by 64% over that same period. And we've only put out record after record. Just recently we did record revenues in Q1. We grew earnings, paid an increasing dividend, and paid down debt, all at the same time. And we're also launching incredible initiatives globally as well as throughout the United States to grow. So it's certainly frustrating. What we can continue to do is drive our earnings up. And hopefully, over time, while the stock price is at its lowest, it'll come up and that'll give us more ability to acquire more companies.
So of course, subject to market conditions, being public is one thing. Then you've also got one thing too, master of your own domain is how I see it from a personal liquidity standpoint without a big sponsor overlooking your shoulder, determining your liquidity outcomes is potentially an advantage in a bull market. That would be great. But I think we're coming up on time here, everyone. So thank you so much for joining us with the panel here. And if anyone else wants to talk about capital markets goals, feel free to reach out to us. But thanks, gentlemen, for joining us, and always great to see you. Thank you so much.
Thank you.